Awesome. Here is a stock that has like a really soft spot in my heart. And honestly, like I learned so many lessons trading Nvidia, and I know you can learn so much from this one stock because it just does so much. And there's really three things I want to focus on. Now, our first order here is at 186.07, which is right about here. But that's really, I don't think, fair way to start with Nvidia, because that's not where this journey begins. That's not where the Nvidia train begins. And while it might start there for this portfolio, there are not enough words to explain like the emotions and the things, like, everything about this. It's so great. Some of you guys may know, like Nvidia is one of the first stocks I ever bought, like a long time ago. I was first investing, and I was like super into tech stocks because like everything I used in my day-to-day life, like I was really into computers, so I built computers all the time. And I was like really into industries that were focused around technology. And so like I just naturally gravitated towards stuff like Nvidia when I was starting out. And a lot of it has turned out really well. You'll see AMD soon. It's been a good ride with them. But I remember I was first getting into Nvidia, and I was also sort of learning about technical analysis at the same time. And this chart makes it a little hard to see. But a long time ago, Nvidia was just a little itty bitty $100 stock. Basically, like I bought these guys, one of my first investments ever, and they had gone up from about 20 or 30 bucks to, give or take $100 in a very short period of time. And we kind of get rid of all these indicators because I didn't actually know how to use all these indicators when I started investing. So I don't know if they're even that important for Nvidia at the time. But I did see that like they had a solid framework, they had a solid company, and they make a lot of money because they sell a lot of stuff. And I knew that kind of is just like an end user of the technology. Like I buy tons of their cards for clients and for myself just because they work really well. And so I started getting invested. I'm like, all right, cool, I'll buy Nvidia stock. So I'll buy Nvidia stock, $100. I remember like it started going up, started going down, and I was like, whoa, this is so cool. I wonder what's gonna happen next. What's gonna do? What's gonna be the next move? As I was sort of going through this process of making, one of these initial investments, I started learning about this concept of upward wedges and downward wedges and technical analysis and all these things that I'd never heard of before. And I was like, whoa! And when I was starting out, I remember there were just a lot of websites at the time and a lot of content that was out there that was just kind of, wrong. It was just, like, it just wasn't true. And what they were teaching or what people were saying was wrong. And I know that looking back after trading thousands of stocks, just because like I know that doesn't work. It's like that's not how it works. But at the time when I was new, like I didn't freaking know. And I saw this one site, and the site basically said that if you had a stock that was going up and up, and then it went down a little bit, then went up a little bit, and it made a downward wedge, right? No, not upward wedge. It made a downward wedge. If it made a downward wedge, with downward wedges, you guys probably know. I think we talked about these already in so many courses, but like literally they're the best thing ever. They're super cool. Basically, you have a stock and you have like this downward wedge, right? And it breaks out and then it goes up. And with swing trades, long-term investments, the downward wedge means it's gonna freaking go up, like 9.9 out of 10 times for the swing trades, long-term investments. And then maybe like 1 out of 100 times, it's a very small chance it'll go down. So you set a stop loss like right here. And you go long and you kind of take whatever this height is right here and you add it to the top. Conservatively, that's going to be your target. Now, at the time, I was learning about these technical analysis. I was learning about wedges. I was learning about setups like this. And I was reading a bunch of sites that instead of saying that the downward wedge meant it was going to go up, it meant it was going to go down. Because it has down in the name, of course it means it's going to go down. So I read all these sites that had sort of this false information about downward wedges, and I was like freaking out. I'm like, crap, right? I got this stock, and I'd owned it for maybe a couple of months at the time, and I'd kind of ridden the ride of going down 5%, and going up 5%, and going down 5%. Like that was a really big sort of mover for me, and I was like, wow, this is so interesting. Oh my gosh, stocks. And then I came to this roadmap, and this was like right in the middle of everything. Got to the point where Nvidia, they'd sort of reached the edge right here, right? So you've got your wedge, and they had kind of reached exactly where they were in this picture right here in this chart. they were kind of like right here on the downward wedge. And I was freaking out because downward wedge is usually, you have this breakout point, and this breakout point is very often, the breakout itself, at least on a weekly chart or a daily chart, is caused by some sort of catalyst, right? So you have a catalyst that actually makes this actually trigger, and then as soon as you get to this price level right here, or this price level for a downward wedge, this price level right here, once you get to that price level, it's just straight up, and that's usually where you buy. And you can set a conservative stop loss at this support level right here, and it works out really well. But that was sort of the strategy. Well, looking back, that was the strategy. But no, at the time, I didn't know that, right? And so I got to this point where I had this stock, right? And it had been going, and I made like 4% on the trade because it went up like from $100, like $102, then $104, and I was like, well, what should I do? And I didn't really know. And then one day was the day that Nvidia reported earnings, and this was like dream day. This was the day because I knew that like this was going to be the day that determined it, like them breaking out of the wedge. And if I was smart, I would have known that they were going to crush it because downward wedges mean that it goes up. But I didn't know that at the time. Though it was the day of earnings, and they report earnings at like 4:20, 4:30 after the market closes. And so I'm going to school with my mom. She drives me to school, and we kind of drive up to the front lot, we drive into it was interesting, there's like our school has like roads that they built just for the school, and so like there's this road that kind of connects like the high school and the middle school, and we're driving like along this like 2-lane road, like in the middle of the campus to get through carpool. We get through carpool, and the lanes kind of split, so there's like a far lane and a close lane, and so my mom pulls into the far lane because it's usually a little bit faster, but it's also further away from everybody. I get out of the car and start walking to school, I cross the street, I go over to school, and I'm like, 30 feet from like the front door of the school, and it's like probably like next to the gym by a couple hundred feet, and I'm like standing there, and like all I can think about when I went to school was stocks, because like what else mattered, right? Like it's just stocks. Like what are you gonna do at school besides look at stocks? Like there's anyway, like all I think about was stocks, and I'm thinking of things like stocks, like Nvidia earnings. So my portfolio consisted of 3 stocks at the time. It was Nvidia, AMD, and Micron, which was just terrible diversification. So it's like I'm like standing like 20 feet from the door to the school, and I realized like I didn't have my phone in my pocket. And by the way, for those of you guys who don't know, like apparently when you keep your phone in your pocket, it like gives off like radiation, and for men it's supposed to like kill your sperm count. So man tip is to like keep your phone in your backpack instead, or else you'll like kill all your sperm count, which sucks, and you don't want to do that. You can literally double your sperm count just by not having your phone in your pocket, or if it's in your pocket, like turn it completely off so it doesn't have like the cell phone stuff. But anyway, I realized like, holy crap, where's my cancer device? Where's my phone? And I realized that I didn't have my phone. I was like, oh my gosh, I don't have my phone. Oh my gosh, it's Nvidia. They're reporting earnings. I gotta have my phone. And so I remember I turn around and I start like running to catch up with my mom who's like driving off the parking lot. There's like the road connects to a parking lot, connects to the actual road, connects to a bridge, connects to the street. And she's like driving off the way to go to work downtown. And she's gonna go to her law firm, right? She's gonna go work all day, and she's gonna be gone, and she's not gonna be coming back. She won't come back till like, she would always pick us up like kind of super late. So like I was in the car for like an hour, so school might end at 3, but she's not gonna be there till 4. So like if she's gone, there is no chance I'm gonna be able to do anything with my phone for the entire day until the market closes at 4. And so because of that, I'm freaking out. I start running like across the street. But I had this like trombone, right? And I was in the band, I had this big trombone. I didn't think to like put it down. And so I remember I'm running at her while I'm carrying this like giant trombone. And she sees me in the rearview mirror, and so she like slams on the brakes because she's like, holy crap, this guy's like running at me in the middle of the street, like the mini street. And so she slams on the brakes, I'm right behind her, and like due to like momentum, like I got this like giant super heavy trombone like carrying it with me, and I just like slammed into the car. Oh gosh, it was just like right into the car. It was insane. And I remember like flopping in the car. I don't think I dented anything. And I'm like freaking out. It's in the back of my head. All I can think about is this downward wedge Nvidia. And I'm like, oh my gosh, what's gonna happen? And so I like run in the car, and she like freaks out. She gets out of the driver's side, and she's like, what is he doing? Are you okay? Oh my gosh! And I'm like, please, I need to get my phone. And so she like to open up the trunk, and then I fall in, grab my phone from the trunk, close the trunk, and she walks away. I walk away a little bit beaten up, but I go to school. And like all day, all I do is read about all the news, and we talked about this earlier, with the news, and all the news about Nvidia said it was gonna go down, it was gonna be awful, they were gonna do terrible, their stock was way too high. And like I talked about earlier, like the news is usually wrong. And also downward wedges mean the price is gonna go up. And so at that turning point, that's when I was reading all the stuff about the negative news, and all the stuff about like the fake negative setup. And like, I just spent the entire day consuming all this negative information, and I was like, oh my gosh, I gotta get out of this position. So I pick up my phone at lunch, and I call my broker, and I'm like, hey, yo, drop like $3 grand of Nvidia, just sell it, get out. Sells it, and it was like a 12% annualized gain, so it was like 4% gain in like a couple of months. And then I get home that day, and I'm like listening to the earnings report, like, oh my gosh, I'm gonna be a genius, this was such a great decision. And then as soon as they start the earnings report, it's like 4:20, and like within 30 seconds they report like their first quarter financials and their revenue and stuff, and like instantly I'm looking at like the charts and the stock tick, and it just explodes. Like it goes up 20% in a matter of like seconds. I'd say it probably took like maybe 45 seconds, and it was up 20%. I mean, it was insane in the post market, and it just freaking crushed it. It was insane, and it just kept going. I mean, it's crazy. And then you kind of get to where we are today. That was kind of how I first got introduced to Nvidia. Was by totally missing out on this gigantic move. It was crazy because the next day they went down to like 110 again. I think the low, yeah, they went down to about 114. I swear I saw them at 110. That might have been aftermarket one of the days. And I was like calling my broker, telling them to buy it again, but I couldn't trade post market. And I also couldn't repeat trades on a rolling 30-day basis because it wasn't under my own account name. And that for me was like, that was a ticker down. I didn't know about UG Makers either. And that time period was like right here. So it looks like a little small chunk on this graph, but in reality, like that's a pretty decent amount of time. And that's a really critical part of this growth phase, is when Nvidia was sort of in this consolidation, where they'd just gone from like 20 bucks to 100 bucks, and then up to like 200, 300 bucks. It's a really impressive gain. So for me in this portfolio, I was making like longer term investments after the fact, after all this crazy stuff at the beginning when I had no clue what I was doing. And I remember looking at the stock, and I was trying to figure out like when would be a good time to buy it, like right now. Should I get in like afterwards or not? And what's cool is there was a little bit of a little upward wedge right here, and it's kind of hard to see, but if you kind of look at it close, you guys see you got a support line right here and a resistance line right here. And when you have a lot of momentum behind the stock, what's cool is like you can basically have any kind of wedge pattern, and I mean it can turn bullish if the market really wants it to be bullish. And so that's sort of just kind of what happened is the stock just kept going up. And I wouldn't say any of these were really like pattern trades. Like there was a little bit of a wedge right here, but I would say it was like a phenomenal wedge. Really, like I didn't even notice this wedge at the time, and I don't think it's a very important wedge. I think the biggest thing to notice here is that when you have a good company and you have a really hot market, because at the time you had a lot of people buying Nvidia graphics cards, myself included, to mine cryptocurrencies and make a bunch of money, really great ROIs on those sort of hard asset investments. And so that was probably one of the big things that kind of fueled this growth, was a lot of those major plays in the crypto space and a lot of inflation, not just inflation, but like a really, really quick increase in demand for sort of the products that Nvidia made. And at least on the consumer side, they were huge. And the same thing kind of happened at their data centers, as they just had a really great product. And so because of that, people, bought a bunch of it. When they're selling and people are buying, then guess what happens? They make a bunch of money, right? And so that was basically exactly what happened with Nvidia, is they just did a really good job of doing what they do, which is, selling computer parts. I wanted to get in on that, and so I kind of bought at 186 right here. It was after this little breakout happened, but I knew that since this actually broke out onto the upside instead of going down, because upward wedges usually go down. Again, this was a kind of a condensed upward wedge, so it wasn't like as solid. And it had a lot of momentum behind it. It was more like a bull flag than anything else. So I saw that it broke out of this upper wedge and it was continuing, and so that's kind of when I decided to get in and buy and ride it up. And it went up from about $180 to $280. So that's about 40% or so. And then it had this big crash, and it went right back under what I started at, which kind of sucks. I probably should have a stop loss on this trade, but I think I was a little bit aggressive with the stop loss just because I kind of know how the company works. I think I said stop at like 110 or something. It was like super aggressive. Like, you should never set a stop loss. Like, that was a really bad price level, because usually like you want to get in the stock and then like have a reasonable level that's close to it, not that's like 1,000 miles below it, because you don't like, usually you've got two options, right? The first option is to just hold on to it forever and ever and pray that it keeps going up, and if it does go up, then great, you know what, no harm, no foul. But the second option is to set a tight stop loss and get out if you're wrong, and then just get in when it gets super low later on so that you can be right another time, and then have another stop loss for another trade. And that's kind of the strategy that works best for most of the students I teach, and for basically any asset. It just makes more sense to have a tight stop loss in almost every situation than it does to just take a giant loss, because you can always buy back later. It's not like you sell and you have to sell forever, like you can get back in later. So probably should have done that. And basically what happened after that is you had an interior Bollinger Band W setup, so you got your W right here, and it bounced right off the band, right into the bands, right off the bands, right into the bands, and it had a really great breakout. I got some calls in as soon as it broke out of this W setup. My target for this setup was about $190 to about 140, which is about $50. So my target was 240, which is pretty reasonable. I can't reach that high, but if you just do some finger math, this range right here added to the top of it to about 240. So I sold most of that at 240, and I was very surprised that it actually kept going to like $300, which would have like probably like 8x my profit. And so this is when I learned a really important concept: is these interior Bollinger Band W setups. And I remember I talked about these at 9 to noon, but I didn't really talk about how insane they were because I didn't understand it until I made this trade with Nvidia. These interior Bollinger Band W setups, you want to take the targets you have more conservatively than you would have like a head and shoulders target or ABCD target. Like, those targets based off of technical setups are pretty solid, and downward wedge targets and upward wedge targets and bull flags and bear flag continuation targets, those targets are pretty solid. But with W setups and also with M setups, these targets, they can be a little bit more aggressive because these are very high momentum swings, especially with weekly candlesticks or monthly candlesticks. These W setups, like, I would challenge you to take the profit, take this range, right, and add it to your top. Instead of doing it once though, do it twice. And what I found trading probably about 8 of these in the last couple of months is that you can basically double your predicted target, and it'll freaking hit that. And so this has allowed me to do some really ballsy out of the money call plays in the past couple of months that have turned out like way out of the money, and then it goes in the money, and then you're up like 1,000% in like 4 days, and it just like, I can't guarantee anything. But definitely these interior Bollinger Band W and M setups, these guys are really powerful, especially in a market that's like volatile. If you've got volatile stocks, like these M's, these W's, they literally, the upside on these and the downside, like if you're shorting them, is just absolutely massive. And so if you see these, like we talked about earlier, these are like when we were talking about priority and significance and superiority with technical setups back, I think it was 4 stocks ago or something. These are really phenomenal setups, and I would challenge you, at least in volatile markets, multiply the upside target you have on these by 2, and I've found that it hits it really well. So definitely an absolutely phenomenal technical indicator to use, price pattern, whatever you want to call it. Those interiors, Bollinger Band W and M setups are, gosh, just phenomenal. I didn't even know about those until I was writing 9 to noon, and I was like right about to like call the manuscript, call it finished, call it complete, and send it off to the publisher and be done. And then like I like learned about this, and I was like, whoa, wait, that's a thing. And then I started applying it for like a month or so on like 5 trades, and I like crushed in all the trades because it's a really good setup. Like 4 out of the 5 trades exploded, and I was like, wow, that worked really well. I should like write about this in one of the chapters. And so I think I wrote about it in one of the chapters. I think it was near the VWAP chapters, like 25 or something. But that'll break it down a lot deeper than what we went through in this semester. That's like, oh gosh, like you guys have 9 to noon, so like that's the golden part. It's like you have the resource, you have the tool like in your hands, so you can reference this anytime you want. Because these are like just absolutely phenomenal stuff. So with that said, that's Nvidia. I should probably get the hell out. I think I'll sell because they're at sort of that longer term. Maybe if I go, no, I can't reach that high. But I'll tell you what I'll do. I'll make a little stick for you. Since basically you have this long-term resistance level, like right up here, I'm pretty sure this is probably going to be their top, just also because they've gone up so much. So if there's a crossover here on the MACD, on the weekly or on the monthly, I'll probably get in puts, especially if the market's going to crash. The only thing is like this is like a really good like bullish thingy, so I'll be careful with it, be tight on the stop loss for it. But if this crosses and the RSI looks good, I'll probably buy puts on these guys. And I mean, that's like 4, 5, 6, 7 trades. And all of them have just done phenomenally from a swing trading perspective. Obviously, it's a bigger stock, so I haven't really done day trading on it. I also haven't messed with day of expiration Friday calls or Friday puts, like we talked about in the Shopify session, just because if you look at the stock like holistically, what you need is not just volatility, but you also need setups, right? So if there's not a setup to trade, the calls for this coming Friday near the money are about $7. So that means the calls that expired yesterday are probably about $1. But for me, like I could care less if the calls are $1 and your upside is $7 and you have 7x upside, if you can't actually predict it, right? So you just need to see, I guess, a pattern. And so like at least this Friday rather than that pattern, considering how insanely volatile they've been recently, that might be a really great way to actually make, 8x returns in a day. You do need a setup though. Like I don't see a setup here, but maybe there'll be a setup next Friday or one of the past Fridays or something like that. Because if you can have a setup on this, I mean, hell, this is like a pretty nice end. Like honestly, that's a really nice end. And you can see top of the Bollinger Band, bottom of the Bollinger Band, top of the Bollinger Band, bottom of the Bollinger Band. And like we talked about, take the height of this, which is about like 315 to like we'll call it 312 aggressively. That's a $5 spread, not a $5 spread, a $3 spread aggressively. And then you multiply that by 2 and you get 6. And you do like 312, 313 minus 6, and you aren't even getting to where it went to, which was like 300. And so that's like a 306 target. And I mean, if the puts are really only, so yeah, you know what? I'll start messing around with that because that looks like a really solid one to add on the list. So I will definitely keep up with that because I mean, you can make more trading that in one day than I made on this position in like 3 years. And so like if you can do that, like freaking do it, right? Day trading way easier, in my opinion, than any kind of like swing trading or long-term investing. Just requires a little bit more attention, right? About 10 to 12. That's usually when you're gonna have some of your bigger stocks swing. So what I usually do in the morning is I'll like day trade, or 9 to noon trade the like really great pre-market gainers in like the 50 cent to $25 category. And then like around 10:30, 11, start to transition to some of these bigger trades and you just trade them with options and you get the same kind of volatility. Because most of the bigger stocks won't actually start moving until about 10 o'clock because most of like the institutional investors won't start trading them until about 10 o'clock. Whereas with the smaller stock, with the pre-market gainers, you get like tons and tons of volatility and growth because everyone that's really actively managing their money is focusing on those like gaining stocks. And you just find those through screeners like we talk about in the book. And then like you just trade those while everybody else is trading those and you make a bunch of money there and make like 60% there and then you just transition over to the options trades. So you make like another 60%, 400% there, and then you finish the day making more money than most people make in a year. And like that's the goal, that's the strat, and that's the big takeaway. So with that said, thank you so much. Hope you got a ton of value out of this training. Go out there, apply it, absolutely crush it, and I will see you next time. Bye.